Hello everyone and welcome back to Macaia Wealth Building channel. In today's video we will talk about Central Bank Digital Currencies, or CBDCs for short. In this video, we will explain what CBDCs are, their advantages and disadvantages, and which countries have already implemented this system. What is CBDC? Central Bank Digital Currency is a digital form of a country's fiat currency that is issued and backed by the central bank. It is a digital equivalent of physical cash, which can be transferred electronically, providing increased security, speed, and efficiency. CBDCs are intended to facilitate faster and cheaper cross-border payments, improve financial inclusion, reduce the reliance on cash, and provide a more secure and transparent payment system. Advantages of CBDC. One of the main advantages of CBDCs is that they can potentially reduce the cost and time associated with cross-border payments. Traditional cross-border payments can take several days to complete and are usually subject to high fees. CBDCs can facilitate near-instantaneous cross-border payments with significantly lower fees, making international transactions more accessible and affordable. Another advantage of CBDCs is that they can potentially improve financial inclusion. CBDCs can provide individuals and businesses with access to banking services that are currently unavailable to them, particularly in countries with underdeveloped banking systems. With CBDCs, people without access to traditional banking services can participate in the digital economy, making it easier for them to engage in online transactions. CBDCs can also reduce the reliance on cash, which can be costly and risky to handle. Digital currencies are more secure than physical cash, as they are less prone to theft or loss. Additionally, CBDCs can provide greater transparency and traceability in transactions, making it easier to combat fraud, money laundering, and terrorist financing. The following are the disadvantages of CBDC. One of the main disadvantages of CBDCs is the potential impact on the commercial banking system. CBDCs may compete with traditional bank deposits, which could lead to a reduction in bank deposits and credit creation. This, in turn, could impact the profitability and stability of commercial banks. CBDCs could also lead to increased financial instability in times of crisis. In the event of a bank run, depositors could quickly withdraw their funds and transfer them to CBDCs, exacerbating the bank's liquidity crisis. This could potentially lead to systemic risk and financial instability. Another potential disadvantage of CBDCs is privacy concerns. Digital currencies are inherently traceable, which means that every transaction can be monitored and tracked. This could raise concerns about privacy and the potential for government surveillance. These are the countries planning to use CBDCs. Several countries are currently exploring the possibility of implementing CBDCs. China has been one of the most aggressive in pursuing a digital currency, with the People's Bank of China launching a pilot program for a digital yuan in several cities across the country. Other countries, such as Sweden and the Bahamas, have also launched pilot programs for their CBDCs. In the United States, the Federal Reserve has been conducting research on CBDCs and is currently exploring the potential benefits and risks of implementing a digital currency. The Federal Reserve announced on March 2023 that the FedNow, the U.S. CBDC service, will begin operations in July 2023, and they released specifics on the launch preparations. The Federal Reserve will commence formal certification of participants for the service's launch in the first week of April 2023. In Europe, the European Central Bank has also been studying the feasibility of CBDCs and is expected to make a decision on whether to proceed with a digital euro. And there you have it. CBDCs have the potential to revolutionize the way we conduct transactions, making them faster, cheaper, and more secure. However, there are also potential risks and concerns associated with CBDCs, including the impact on the commercial banking system, financial stability, and privacy. As more countries continue to explore the possibility of implementing CBDCs, it will be important to carefully consider the potential benefits and risks of this new technology. Thank you for watching and we hope you found this video informative. If you have any questions or comments, please feel free to leave them down below. Don't forget to subscribe to our channel for more financial education content.